This is Las Vegas Real Estate Now with local real estate expert Harvey Blankfeld.
Where we want to educate you about our market, empower you to make wise decisions, and help you engage with our expert contributors.
Managing debt and how that relates to mortgages and maybe either and or refining.
Sure.
Let's talk, John, give us a scope of what you're considering right here.
Well, the core concept of what I'd like people to be thinking about and be considering is to think about a mortgage as more than financing on a house. It's actually can be larger than that, and you have to look at it in the scope of all obligations and financial goals that you might have for your life going forward. A mortgage being, very frequently a 30-year kind of debt obligation. There are strategies that can be implemented and used to really move you forward financially in life with where rates are, with how attractive they are, with the popularity of refinancing now. This is something I think that some consumers can be missing when they go and simply say, I want to refinance my house. Let me get the super low rate. I want to drop my payment a couple of bucks. And that's the only consideration they have, as if they're buying a can of beans off the shelf.
Right.
That's a mistake. You can really benefit from looking at your whole financial picture when it comes to the obligations and debts that you have when you are refinancing your home. I had a consumer come to me, wanted to refinance their house. And sure, we could simply refinance their existing mortgage, drop their interest rate, and save them a couple of $100 a month by doing that.
Okay.
But if we took that one step further, I was able to look at their entire financial picture and basically take this opportunity. We were able to take cash out from their property and eliminate or pay off a bunch of debt that they have, multiple payments. And what we were able to do in this specific case was by doing more than just lowering their house payment. We said, what if we refinance this house, keeping your mortgage payment the same as what you have now? And by doing that, we're able to take cash out on the property. We can actually borrow more. And if we took that cash and paid off your debts, in this case, we were able to save them or eliminate from them $2,000 a month of monthly bills. If I take that $2,000 that you've saved on paying those other payments that you had, and I pump it back into your mortgage, we apply it to your mortgage payment. That mortgage that was 30 years is now paid off in 11 years.
Wow.
So they go from having car loans, trailer loan, credit cards, and mortgage to debt-free entirely in 11 years, and their monthly payments are the same as what they're paying now. Another layer. What if I only took half the dollars? If I took $1,000 of your savings and put that towards your mortgage, they're done in 16 years.
Wow.
Now, if you think about this, this is hundreds of thousands of dollars of savings. This is potentially money that you can use to pay your child's college,
right?
Money that you can use to catch up on your retirement. These are the financial strategies that have to be looked at. And I just worry that some consumers are simply improving their interest rate and stopping any other thought beyond that.
Right.
Most Americans have other debts.
Yeah.
Those other debts will take years to deal with, and they're at much higher interest rates.
Yep. No question.
So looking at this as a strategy is a really healthy process. The Federal Reserve right now is buying approximately $60 billion per month of treasuries.
Okay.
And $40 billion a month of mortgage-backed securities.
Wow.
That's new purchases. That is separate from them. The mortgages that pay off, they end up using those dollars to buy more mortgage debt.
Okay.
And so that's also buying in the marketplace. So it's really doing a lot to support these low interest rates.
Okay.
And support the ability of consumers to borrow money cheaply, to free up dollars to take care of their families and this kind of thing. That was the intent to buy behind what they're doing.
Yeah.
It wasn't throwing a bone to the housing market to make sure we could sell a lot of houses. It was, how do we allow consumers to better set up their finances going forward?
Whenever the calendar changes and we go from a 20 to a 21, some things with loan programs in terms of amounts change as well.
Sure.
So did we had some of those change? You want to review those with everyone right
yeah,
now?
there were. I mean, ultimately, the FHFA, the Federal Housing Finance Agency, looks at the home prices for the year, and they determine what is going to be the new limit going forward into the next year. And we saw in our marketplace the loan amounts increase across basically all products as far as the maximum loan you're allowed to take out. That being $548,250 on a conventional loan.
Okay.
So that was roughly an increase of a little over $30,000 over last year's maximum amount. You saw FHA loans increase their loan amounts to continue to try to serve a healthy portion of the marketplace. So we saw their maximum loans rise to $362 and change.
Okay.
Ultimately, this will help buyers to be able to use these necessary programs for home purchases, even though house prices are rising.
You've been listening to Las Vegas Real Estate Now. If you ever have a question about real estate or any of the other topics we cover, just call me off air or text me at 702-203-1165. You can also check us out on the web at lvrealestateradio.com or on our handle on social media at LV Real Estate Radio. We'll meet you on the radio next Saturday at 11 a.m. right here on the new 101.5 FM, 720 a.m. KDWN, the Talk of Las Vegas.